Okay, thanks everyone for coming to the webinar, and this webinar is in conjunction with BBOD, so thanks very much for the publicity from those guys. Right, okay, so this webinar is about how to identify turning points in the market with supply and demand, and as usual, the usual risk disclosure statement applies. You can lose money. Do not trade in money that you can't afford to lose. You might have seen this slide before, but trading is really somewhere in between these two. You know, we've all seen the pictures on Instagram. It's meant to be easy, just 30 minutes a day with your laptop by the pool. And the second picture is closer to reality. In fact, if you're doing well, you're probably somewhere in the middle of this. Does technical analysis work with crypto? Well, yes and no. It depends how you do it. For me, I found supply and demand, obviously, and also support and resistance, and price structure as well. So we're going to look at all three of these. Okay, so supply and demand. What is it? And can we use it to predict turning points in cryptocurrencies? So how many of you have seen this slide before? Anyone seen it? Right, well, this is just very simple stuff we're going to start with. Okay, so basically this is just a diagrammatic form of what supply is. So the market will consolidate for a short amount of time, and then you'll get a very fast move down, and then we look for a retrace and we sell at the point that the market initially shot down. And the theory behind it is that the imbalance here happens so quickly that not all the orders got filled, and when we get back up to here again, then it comes back for more orders. So that's the basic theory. Demand, it's the same but the opposite. So you've got your small base here and the market shoots up very quickly, comes back down preferably slowly, and that's where we buy, and your stop loss will go below the zone. So here's an example of a supply zone on Bitcoin. It's just a screenshot of a Bitcoin chart. I don't know where the current price is at the moment, but we've got this. So you can see this is the base. We've got the stop loss will go above here, and the market consolidated for a short amount of time, and then we had a very fast move down, and when it came back to the zone, that is where you would sell, and then we had a move which continued down. And for the demand zone, it's the same. We've got a small base here. The market shot up very quickly and it then came back. So we actually had a supply zone here which made a fast move down into demand. It came back and you got a bit of a bounce. Now in this case it just bounced a little bit, and it didn't you didn't get a big move. You then got the zone taken out. Now quite interesting actually, just diverging, there's a reason for this, and basically we'll talk about this soon, but there is a level here. So the market, it came off of demand, hit this previous low, and then it came down again, hammered away at demand until it broke through it. Everyone with me so far? Okay, cool. Okay, we'll see if we can get some audience participation in this one. I'm a little bit croaky, so I might have to mute the mic every so often. Crypto ruined my life, somebody said. Well, I hope not, but okay. Right, and here, talking about crypto ruin your life, here's a demand zone that failed. Now, you're not going to get every zone working, but there is a reason why this demand zone failed, and we'll cover that in a second. So just bear that in mind. Okay, so what makes a good supply or demand zone? Well, what we want to know is how did price move away from the base? So we're sticking with our diagrams here. Let's just clear that off there. We've got a fast move, which is great, but in this particular circumstance, can anyone tell me why this would not be a good supply zone? What is wrong with this? Okay, yeah, so not imbalanced move away. Okay. So basically what it is the market has already come back here. It's come back to supply, it's come down, it's come back. So in fact, you're not getting a fast move away like this because you're already getting retests here. So there's no fast move. Every area here has been retested. So that's what we don't want to see. Okay. Right, so the other criteria is how did the price return to the base? So here, this is the perfect sort of return. You've got your fast move down and then you've got a channel going up. Now, that's what we want to see. We want to see a slow channeled move back to supply in order to sell it. This is also okay. This is a rounded move and that's okay too. What we don't want to see is this V return. When we get a V return like this, it's highly likely that it's going to pop out through the top and continue on up. And the other thing, also known as a Spoo's return, okay, yeah, possibly. So here, multiple tests. The first test is the most reliable. So you get your channeled move up, you get your first test. When it comes back a second time, there are certain circumstances I'll look to sell this, but I'm not going to go into that here. And then a third time, well, we definitely don't want to sell a third test, and it's more likely to break through the zone. So basically, contrary to popular technical analysis, the way it's taught, the more tests you have of a level, the more likely it is to break through. So that's something to be aware of. The first one is obviously the best. Okay, so now we know what a V return is. That demand zone that we looked at before on Bitcoin, that's a V return to the demand zone, and we don't want to trade that. And so there's no surprise why it shot through here. In fact, you can see that when it shot through here, it actually created another supply zone here. And in this case, it was more of a channeled move up, so that would have been okay to sell it. Okay. So question here, let's just to check everyone's been paying attention. Why is this not a good supply zone? Okay. Yeah, exactly. V return. Okay. So just checking your order weight. So yeah, it was a V return. No surprise there why this supply didn't hold. It was a V return. Can you notice anything else about this? Any other reason why the market would have continued on up here? And notice as well that it's a sort of a stair-stepping movement going on here, which you'll see in an uptrend. Yeah, exactly. So exactly, old lows crushed. So let's just clear that. So basically, it reversed after taking out this important low. So that's one reason why. So you've got the low here and the stop losses below it taken out, and you've got the V return. So there's absolutely no way would you want to sell that zone over there. And in fact, you don't want to be selling supply when it's just taken out a low, because you want to give it a bit of time for this momentum to play out. And so any supply zone down here, I would give a miss. So that's why that isn't a good supply zone. Okay, let's have a look at an Ethereum chart. Okay, so this is just a screenshot. I don't know where Ethereum is right now. We can have a look later on. And I've just added some supply and demand zones on here. So these are lower time frame zones. So this is sort of zones that I draw. So there's a small demand zone here. There's another one here where it bounced. You can see here the market consolidated and then it shot up. And again here it consolidated and it shot up. So it came back, tested it, came back, tested it. Here we've got these are, if you went down to a lower time frame than a 4 hour, then you'd probably see these a lot clearer, but I'm just trying to get some other stuff on here too. Someone's missing sound. Okay, I think there should be an icon for the sound. Okay, most people have got the sound. Try clicking sound mic icon. Hopefully that should help you. Okay, so here, this is what I call an engulfed zone, and basically this zone has failed, and that will give us a heads up. We'll talk about that in a second. Now, another thing here is the more confluence a supply or demand zone has, the better. So can everyone see the white lines on here? Let's see why I place these lines where I did. So you'll notice that these demand zones are in confluence with these white lines. And if we go to the next slide, I've shrunk up the chart here, and what you can see now is where the price has pivoted either side of these white lines is where I've got these zones. Now we'll talk about this properly in a minute. Okay, so right, let's talk about price pivot zones, and this is one of my favorite things. It's very, very simple, and it is quite effective. So a price pivot zone is basically when the market pivots either side of a price, basically, or a price zone. It's not going to be a single price, it could be a range of prices. So this is the diagrammatic form of it. The market starts above it, comes below, tests the underside, and again comes above it, forms another level, tests this top side. So let's have a look at that. Okay, so here we've got the Bitcoin 4-hour chart, and I wonder how many of you can actually spot the price pivot zones before I put the lines on. Okay, well, I'm going to put the lines on now. Okay, so we've got a few important price pivot zones, and the reason that I picked these out is where the market has pivoted either side. So let's have a look at the next slide and we can understand a bit more. Okay, right, so here you can see that the market, it's formed a support level, it's broken down, it's come back here and tested it, it's come below it here, it's come above here and again. And so we've got the same thing here. We've got the market forming a range above it, break through it, test the underside again and again before breaking up, and then it tests the top side. Then we've got the same thing down here. So these basically are levels where the market will react either side of these, and when you start adding in supply and demand zones, then you get quite good confluence for a trading setup. And so we've got a very good one here. So the market has been using this level either side, so it's been above it, below, above, below it, and it keeps on coming back to this price, and then it picks up on it again here, and then the same here and here. So that's a price pivot zone. Okay, so now we add in the supply and demand zones, and you can see how I use these as confluence. Some of these zones are blue, and these ones that are blue, basically I mark these to tell me that the zones have failed. And when a zone has failed, that's actually quite a good indicator, and we'll talk about that in a second. Here you can see the V return. It's almost a V return here, so you definitely would not want to sell that one. And the fact it took out the range, the lows here, where you're going to have stops here. So not surprising that one failed. But the point I want to make here is just to show you how these supply and demand zones line up with these key levels. Everyone get that? Any questions? If not, we shall move on. Okay, so no, they're not redundant, those levels, when they're broken. I mean, as you can see here, the market, it broke through it, but then it came back and used it. The actual zones are redundant. So once a zone is broken, it's done. But the price pivot zone, the white line, still is useful. Okay. Right. Right. So any rule to draw supply and demand zones? Well, basically, what you're looking for is you're looking for a small base, and then you're looking for the market to shoot out of that base. And what you can either do is you'll find the exact point where suddenly it's sped out of there, or you can use a candle opens and closes. So we'll have, next time we get a chart up, we'll have a look at that. Okay, quick primer on structure. The next thing I want to tell you about is structure. And basically what we have here, well, actually, first of all, can anyone notice anything about this chart? I mean, the one thing to notice really is that these zones have failed, and that's fine. These blue zones have failed, but what that tells me is that it gives me a heads up for direction. So if this demand zone has failed, it gives me a heads up that we could be bearish. This demand zone fails, it confirms to me again that we're bearish, and the same here. And it tells me that I should be looking at supply zones and selling supply zones. So basically, that's why I color these zones in blue. If you've ever seen blue zones on my charts on Twitter, that is the reason. Okay, now because of these zones failing, we're starting to get an idea of bias of the flow direction. So when the flow is up, it's obvious that we should be buying, and when the flow is down, it's obvious that we should be selling. And you can apply this simple higher highs and higher lows. So basically, this is a very simple thing here. You can see that the market's making higher highs and higher lows. Okay, so it seems like there is a bit of a delay with the charts. There is an app, a Join Me app, but it's probably not worth downloading it now because you'll miss the webinar, but you can catch a recording after if it is delayed for you. Okay, so right, higher highs and higher lows, and basically when we get to the top here, we start making lower lows and lower highs, and that's just the very basic indication of flow. Now, the more astute of you may have noticed that occasionally you're going to get a curveball. I mean, the markets are not perfect. It would be too easy if the markets were perfect. So here we've got a higher high, lower low. We've got a lower high, lower low, lower high, lower low. And then we make a higher high and we make a higher low. So you're going to get these curveballs. But generally, we're just looking at this generally to give us an idea of flow. So we're generally going up here, generally going down here. And you can say this is the point where it actually changed. Okay, now the other thing you can do is you can draw in these price pivot zones. So these are pretty simple price pivot zones, but now you start to see a bit of structure as well. So you've got the market, it breaks through that support, tests the underside. It's not going to be exact. You're not going to, I mean, there's a fallacy here where some trading mentors on Twitter will tell you that everything is to the pip. And that is just such a fallacy. Nothing is to the pip. And I mean, you can see here, the market has hit the underneath, then it falls away, hits the underneath again. And so it's using these levels as support and resistance. Okay, so that gives us another idea. And then finally, the other thing you'll notice in an uptrend, you're going to start seeing bull channels. So basically, bull channel is when the market comes up and it starts channeling like that downwards. Ideally, if it's at a demand zone, then even better, and you can take a long. And so you'll start seeing you've got one here, you've got one here, and then as the market changes, so as you get a breakdown of structure, and it tests the underside and starts going that way, making lower highs, lower lows, you'll start seeing more of these bear channels, and that's where the market will break down. We've got a very nice bear channel here, and in fact that would have been a good setup because you've got a supply zone, you've got this price pivot zone here. You're on the right side of the structure going down, and you've come into supply here. So that would have been a good setup. So really that's what it is with regards to the flow. Now, even better, what you want to see is when you see this sort of structure, and it's not always going to be like this, it's not always going to be as neat as this, it's going to be different every single time. But when you see this structure, then you're going to want to have you're going to want it into a higher time frame level. So this is just for imagination's sake, and there was no zone here on this chart, but I've put a what would be a higher time frame supply zone. It could be a price pivot zone, a higher time frame supply, or it could be a trend line or something else on a higher time frame that's telling you that the market may move. And then you'll drill down to your lower time frames and you'll start looking for this sort of structure. Now, if you want to learn a bit more about structure, then you can go to this article, Why Are Large Supply and Demand Zones So Important? If you go to that on my blog, tradersimon.com, then there's quite a few examples of understanding that sort of structure at higher time frame zones. So something to look at. Okay, I've got a question here. When we have a zone of liquidity like 14k in BTC, and people say that there is supply there, as liquidity is made by stop losses and buy orders, but the people that short the 14k would now close their short, so the stocks will speak. This is a long question. Okay, well, I'm just going to answer this generally. Basically, when stop losses are taken out, that is the market finding liquidity. So you have a high here, and the market reaches for those stops, then people who were originally short are going to have to buy it back here, and people who want to get short here are going to be selling into the buyers here, and that's just how it works. So whenever we go for stop losses, it's really the market is looking for liquidity. It's looking to be able to sell into those buy stops. So I hope that sort of answered your question. Okay, finally, let's just have a quick talk about risk management. And risk management is the key to successful trading. So your edge is spread over a series of trades, and one trade does not matter. Never load the boat on any one trade. Always ask yourself how much you're willing to lose in a worst case scenario. And Twitter might care, but the market certainly doesn't care about your ego. So there's no point having a strong opinion and sort of shouting it out on Twitter, because at the end of the day, the market doesn't care about it. And this is, for me, I mean, personally, this is what I do. Never risk more than 0.5 to 1% of your account on any one trade, and I never do. And in fact, people who are in my group will know that most of the time I only risk 0.5% per trade, and that means that you're going to survive another day. If you get a string of losses, you're still going to be here tomorrow to trade. So that's my advice. And finally, always keep in the back of your mind that all it takes is one trader with a lot of money to sabotage the best laid plan. So you can have the most amazing trade, and a whale comes along and will just basically take out your level that you thought was particularly important, will take out your stop. So with that, that's really what I had to show you for the slides. And what we can do is, because we have got some time, we can look at some live charts, and I'll use the BBOD platform to do that. Let's get out of the platform here and have a quick look at this. Okay, thanks very much for that. So has anyone got a we've only got a small sample on this platform, but as BBOD had arranged this, I'm going to stick with BBOD for their platform. Is there anything anyone would like to have a look at? How about Ripple maybe? In fact, let's get up Ethereum. So Ripple, okay, Ethereum, Ripple. Okay, let's have a look at Ethereum first, and then we'll have a look at Ripple. Now, I'm not one of these people that uses the order book, so I'm going to close that down and all of that. I'm just testing this platform at the moment, so I'm I'm not trading live with it. I'm just testing it. So, okay, let's have a look. And I've got 4-hour Ethereum chart up here. Now, straight away, you can see that the market has broken this key level. And when I'm drawing these price pivot zones, I want to try and get as many candles or as many touches as possible. So I'd put it there. It's not an arbitrary place. It's just that we've got a wick touch here and we've wicked into it quite a few times here. There is a moving average on here for some reason, but I'm just going to ignore that. I don't actually need that moving average because it's just telling me what price is doing, but I'm going to leave that there. Okay. And then the first thing I noticed, we've broken this level here. Okay, so we already had a supply zone here. And just to answer the previous question, the best way to draw these zones is when you see the market make a big move down really quickly. So it made a very fast move down there. And I know this is in hindsight, but it's just to show you as an example. And then the other thing that you'll notice, if I can get the right tool, is we've got a channel going on here. So perfect return to supply. That's exactly the sort of thing that I'm looking at. Now the next thing is we have got a sort of a zone here. It has wicked back a little bit. I mean, but it is a pretty decent zone. So we've got some consolidation here. The market, I mean, on a daily chart, maybe it might have moved a bit quicker. Let's have a look at a daily chart actually. 1 day. Okay, we don't have a lot of data in here. Okay, so it's not really showing much on a daily chart. In fact, if you were to draw the zone on a daily chart, it would be up here. So, and then you've got on a daily, it looks like a fast move. So that's okay as a daily setup. Now it depends how it returns back. So what I want it to do is something like this. And if it channels back again, then that's a potential setup short. So that's around 270. One thing that you can't see on this chart is that this, because we don't have enough data, but I've already looked. Let's just scrunch it up a bit. Yeah, I mean, there's not enough data on here. But this actual area here is in weekly supply. So if you were to look at a weekly chart of Ethereum, then you'd notice that this area here where it turned is at weekly supply. And in fact, I think I put out a chart on my public Twitter feed maybe a couple of weeks ago with that. So you might want to check that. Okay, let's have a look at Ripple. So actually, let's just, before we do that, let's go down to a 1 hour. I always start with the higher time frames. Okay, so that is the daily zone there. It's not great on this time frame. We do have smaller zones here. Now, with cryptos, I'm not keen on trading too smaller zones, but this is this may get a reaction here. So 258. And you've got a small zone here. So you do have small zones. Now the smaller the time frame you go down to, the less likely you're going to get a big move, and you may just get a reaction off of these zones. I mean, the alternative that could happen is when it gets up to here, so you may get a pump and you may start getting a channel back, and you may find you've got a new demand zone here, and you may be able to take it up to this big daily zone and then start looking for shorts again here. So it's just an example. Do you only trade the zones in the time frame you're in, or you still observe the daily zone, for example, when you're in the 4 hour? Now, I start from the weekly, daily, and I zoom down, and if I can see a zone across all the time frames, I know it's a particularly strong zone, but I will look for smaller zones inside the bigger ones as well. In fact, here it's already been tested. You've got a smaller zone here, for instance, but it's already been tested. The market's come back. As a daily zone, it's probably okay. Right, let's have a look at Ripple. Here we go, Ripple. And going to have a look at the daily to start off with. There's not that much data here for me to go on the daily, but I mean, this is, if you see, this is a V return. So this is what I was talking about with V returns. You've got your demand zone down here. So here you've got it's drawn at the bottom of the wicks on this side. That's where your stop loss would have gone, and you've got the fast move up. But you can see the problem here. The problem is we've got this V return again, and V returns are more likely to break through. Now, what's interesting here is that just before it broke through, you had this zone. So you can see the market fell away. It did wick back a bit, but it came back to it. This is an important level anyway, because if I draw a line here, price pivot zone, you can see the market's been either side of that level. And I bet you, I don't have the data here, but I bet you if you were to trace this level back 0.283, then it's going to hit plenty of price action. The price is going to gravitate around it further back on the charts. But what I can see here is this supply zone. So we've now got this supply where so you drew it from the wicks here, the top of the wicks, and where the market fell away very quickly. So it fell away here. So what I'm looking for is something like this, a slow channeled pullback or a rounded pullback to here around 0.27, and then that would be a potential sell. Not only that, but you've got this key level here. So you've got all these wicks into this level here. It's a pretty decent level, that one. Let's just have a look at the 4 hour while we're here. Okay, so when you get to the 4 hour, you can adjust this a bit. So you can see that on the 4 hour, the zone actually starts from here. So the market fell away quickly from here. And when it comes back up, you could look for a short there. And then again, we've got smaller zones where you may get reaction. So we've got a small zone here, for instance, which may give a reaction. And we've also got another one here as well. But generally, the higher time frame zones are going to give bigger moves. So that's Ripple. Go back to the daily again. Okay, so that's still a pretty decent zone on the daily, and it's a good level around there. So, and the fact that we had this big V return and it engulfed this demand zone tells me that we're on the short side now. And I wouldn't be surprised if we start getting this sort of stair stepping down. So that's just a possibility, just like the diagram that I showed you. Okay, let's see what else. So we've done Ethereum, XRP, Ripple, Ren. Let's see if have we got Ren on here. Maybe not. No. Okay, I don't have Ren on this one, I'm afraid, so I can't do that. We can have a look at Bitcoin. So let's just have a quick look at Bitcoin. Okay. So this is a daily. Let's see if I can, how much data I've got here. Okay. So here you can see the market shot down very quickly. I know this is hindsight, but you could draw the zone like this. So you could draw it from the wicks. So the top of the wicks here, and where the market shot away very quickly, it came back. It did spike through it, and then this is the thing with Bitcoin. I mean, you're going to get little spikes through sometimes. So it did spike through it. What I'm seeing now is you got a zone here. So here the market, it just about missed that demand. It came into it and it's taken it out. Now the fact it's taken out that zone makes me interested in this supply zone here. Same as Ethereum really. And I would say if we get a pullback again to here, then it's a possible short. So that's a decent supply zone around 9,600, and shorting from there, really our next zone is here. So you can see here the market shot up quickly from this little base. In fact, you can see here there's another little base as well. So if we draw this one, and I think I'll get rid of my annotations now. So you can see the market shot up quickly here. This is a pretty defined base here. It's a good example of a demand zone. Channeled back quite slowly, then it shot up again. We got one here, almost tested demand, hit it once, twice, 3 times, then it broke through that demand zone, and now we've got this supply. So what I'm thinking is it will possibly come up to this supply and then drop down to this demand zone here, and we may get a bit of a bounce there. How do you identify where to take profit? That's a good question. I do have some proprietary methods I'm not going to talk about here, but very generally I would take profit as an opposite zone. So you've got an opposite demand zone here, and this is where I'd be likely to take profit if I shorted here. And in fact, that's pretty decent risk reward. I mean, for that amount of risk to that amount of reward, that's pretty good. So really it's look for opposite supply demand zones. You can also look for price pivot zones as well. So for instance, if we look here, in fact this one is the first one, you can see the market here, it's been either side, it's been above it, below, above, below, it's come below it, and then it's tested the top side. So here, if this demand doesn't hold, and remember we're biased short here, then that's still a decent level to take profit. And if you wanted to hold a portion of a trade, you've got another price pivot zone here, so you can see the market's been either side of it, and that's a potential area where it could turn. Okay, do you ever trade SD zones blind, or would you recommend observing price when it enters before triggering a trade? Yeah, so there's 2 ways. I mean, if you can't monitor the charts, if you're at a day job, then you can put blind orders in. Now, the problem with that is that it could just plow through. So your win rate is going to go down, but you're actually getting in at a pretty good price. If you had an order here, then you're getting in at a pretty good price, and you may get a bounce. I mean, you may be able to, even if it doesn't continue on down, you may just get a small bounce and take some profit off and let the rest run. But if you've got time, well, then you can start looking at what I showed you, which is if you remember the structure we were looking at, you can actually watch the structure on, say, a 15-minute, a 1 hour, even a 5-minute, and start watching for the structure to turn, and you can get in like that. How do you handle big zones like the lower one, BTC 600 USD? You mean 6,000 USD probably. So yeah, so there is a big zone here, and if I just clear all my junk off of here, if we go to a weekly, let's just see if it shows up as oh, there you go, right. We haven't got much data here, but that does show up as a weekly. So yes, that is a weekly zone, and there's 2 ways to handle it. So you can either, if you're a position trader or a swing trader and you can't sit in front of the charts, you could just have an order waiting to be filled here and just leave it there and walk away. Now, there is a possibility that the market could just go through, and in that case you take a loss. But if you do get filled here, you got filled at a very good price, and often when you get the market wicking, making a wick into a level and then just reversing, you're not going to be able to enter it with a market order anyway, so you may catch a very fast spike into this level. In fact, one thing you could do is divide up your trade into lots of orders, so you could have lots of little small limit orders like this, and depending on how far it spiked, you may get all or you may get none, or all or some of your fill. So that's one way of doing it. So have a range of orders at different prices. Now, if you're here and you're able to watch the charts, well, then you can start looking for the change in structure. So when you start seeing a change in structure, you know you can get in looking at the lower time frames. Okay, fill stop and straight back up. Well, your stop would be here. So if you're going to put a limit order here to buy, your stop would be here. And yeah, I mean, you know, I'm going to tell it to you straight. You may get stopped out, or you may get the best entry ever. So it really, if that's how you're going to play it with limit orders, then that's what to do basically. I called a dump from 10k. Yeah, I did. Can I remember why? Because I've been looking at so many charts since then. It was probably to do with the structure, actually, to be honest. Let's just have a look at the 4 hour. Okay, so we did get higher than 10k, but the structure is starting to look down. So yeah, I mean, I don't think I would have called it here, but when I start seeing stuff like this, you know, so again, you start seeing supply holding, and you start seeing demand being engulfed, and when that happens, then it's going to make me more bearish. And you can see that there's, you know, so you got another zone here that it came back to. So you know, that sort of thing. There's also other things about structure that I teach, and there's other things that I look at. But what I've shown you here in this webinar are the basics, and so yeah. I think also when I do call levels short, then there's probably a good reason on the higher time frame. So around, I mean, 10k is a round number anyway, but you could probably trace this along to a pretty significant level on a weekly chart. Would you set buy sell orders anywhere in the zone, or do you try to focus on the edges of the zone? If I was going to place an order, a limit order, then I would place it at the edge of the zone. Now, the question is, sometimes you're going to get filled, sometimes you're going to just miss the trade, and sometimes the market's going to go really deep in. So here, for instance, it may go really deep into the level, and it may scare you. So really, if you're going to do that, it's best to place the order and walk away. But yeah, I mean, as I said, the other way to do it is to have lots of orders. So you could start midway through the zone, and you could. To be honest, I don't do this very often. I may place 2 orders, but I won't place lots of them. But it is a way to do it. You could just place a range of orders, and depending on how high the market came up, depends on how many you'd get filled. Now, obviously, you've got to work out your risk, because you don't want to over leverage by doing this. So work out your risk, work out 0.5% or 1% of your account, work out how many entries you want to make, and then divide your risk by that. Okay. Any other questions? Okay, so you studied my Udemy course. Thanks very much. Well, really, I mean, I do have a private group, but there is a waiting list because I'm not having too many people in it, because it's quite distracting to my trading. You could have a look at my Twitter feed. I mean, I do put out a lot of charts on Twitter, so you can have a look at that. And apart from that, I mean, it's really looking at the charts and just spending hours and hours in front of the charts. So I can tell you that I'm often up till midnight looking at charts, just for fun, and that's what I do, and that's really it's self-study as well. So okay, any others? I think we've probably got 10 minutes before I'd have to. Okay, any good supply and demand trade? You know, there aren't. I had to teach this also. I'm completely self-taught. I had to learn this myself. What I would say is, what to really work on is psychology. Psychology is the hardest thing, and There is a good book, and I don't get any payback for this at all, but High Performance Trading by Steve Ward is a really good psychology book. There's no trading strategy in there at all. It's just dealing with your inner demons and dealing with problems that you would have picked up. And in fact, the more you trade and the more you trade badly, the more baggage you pick up along the way, and it's harder to shake it off. So that's a really good book, High Performance Trading by Steve Ward. What worked best for you to learn how to trade? Books, courses, or just trade and learn from your errors? I just had to learn from my errors. I'm completely self-taught. When I worked for banks and I worked on the equity program trading systems, they were just simple systems. They were just trading for pension funds and giving them VWAP as a price. They were just agency traders. So working in banks, I mean, although it was very well paid, I didn't actually learn a lot about technical analysis. And I just had to teach myself and also swap ideas with other people. Could a supply and demand zone be crossed and still be valid? Okay, so when a demand zone is crossed, that then tells you that you're like this demand zone, it was crossed. It tells you your bias is short, and it's giving you a heads up that you should be looking to sell supply. Even if the market comes back up through it, I'd still be looking for supply to sell. Do you use a trading journal? I actually prefer to take screenshots. I'm a very visual person, and although I do keep spreadsheets, I actually prefer to take before and after screenshots, and I've got screenshots going back about 10 years. So that's how I journal my trades. I'm just a visual person, which is probably why I did art and computer science at school. So and why I like explaining things in a graphic style and looking at charts. Finally, if you want to learn some more, you can go to the blog on my website. There's some good articles on there, and the good news is it's completely free. And if you'd like to accelerate your learning, there are two courses. The original supply and demand course that has over 1,300 students, and as at the time of this recording, a rating on Udemy of 4.9 out of 5 stars. And there's my new flagship course that teaches proprietary methods that I don't disclose on social media and work incredibly well with US equity indices and other assets. Both courses are available on my website, and I'm offering a 20% discount for viewers of this video. Just enter the code BBOD20 at the checkout and the discount will be applied. And finally, I hope you've enjoyed this webinar and learnt something from it. Give me a like and subscribe to the channel if you did. And also you can catch me on Twitter at TraderSimon. And I look forward to seeing you in the next video.